Hey, Job here. On this channel, I invest 100% of my income to create cash flow that will replace my salary eventually. And I live out of my Robinhood brokerage account by paying bills with margin. As you saw in yesterday's video, I've been doing this for a year now, exactly, since the end of May 2025. Today, we'll be going over the week 53 or month 12 portfolio update since I started this strategy. That should hopefully bring me to an earlier retirement at 40 years old. It's a very aggressive strategy for sure, but as you saw in my 1-year retrospective video yesterday, it's yielding some pretty promising results. I'll go into all the details of my performance this week and this month, breaking down how I almost 4x the S&P 500's performance this week with my 2.67% gain, and how I almost 2x performance on the month with a 13.23% gain. I'll check in with my margin health, all my dividends received, portfolio thoughts, and finish with the finance video of the week. All that said, as usual, you'll get radical transparency on my channel. Whether the market is up or down, you'll see all my real numbers and see exactly how much skin I have in the game with any given position. If you appreciate all the transparency, give a like and subscribe. Just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, and make sure you read this disclaimer. As far as the flow chart, I won't go over it. You can pause and kind of look at it for yourself. And really, if you want like a full breakdown of this, you can check out the video at the top right. But yeah, let's just dive right in. So if we pop over to Robinhood and look at the numbers, so you can see this is my live portfolio. Filming this on Saturday night here on 5:30. And yeah, so you can kind of see that my net asset value sitting at 230.8K. Had a little 0.24% gain on Friday. It was a bit of a weird one on Friday. I was kind of like up and down and kind of just ended up trading sideways and got a little bit of dividends that boost this up, but not too much. So yeah, it was up $540 or 0.24%. On the week, you can see here that I was up 2.67% or 6K. On the month was up 26.9K or 13.23%. So big run up this month, just kind of continuing the last several weeks of green we've been seeing. Up 58.7K or 34.10% in 3 months. And just as a reminder, this is all total return, right? So this includes dividends received. And yeah, 49.5K up or 27.35% on year to date. And if you go to all, since I transferred into Robinhood in July, I'm up 56.7K or 32.56%. So amazing overall. If we compare this to VU, you kind of see when I say that I almost 4x the week, VU did 0.70% this week. And then on the month, it did 6.28%. So I compared there, right? And I'm just kind of noting this just because we'll see it in Snowball and the numbers differ there a little bit. Sometimes it kind of gets fudged there on that side. But yeah, just wanted to show that. And yeah, and if we pop over to the investment portfolio sheet, we'll dive deeper into the numbers here. Yeah, because I've really customized it to kind of really get a lot of the key numbers that I want, right? And yeah, so if we add up all my assets all together, that's amounting to a gross value of 411.7K. I'm using quite a bit of margin, 181.5K, which gives me that net asset value of 230.1K that we saw. And yeah, overall, we can kind of see that, like, yeah, just with the big run up that we've had the last several weeks, like most of the total return column has flipped green, right? Still some laggards here with ORR, for example. ULTY here is almost just out of the red here. Like ULTY and YMAX have actually been climbing with the market, surprisingly, even with all the dividends it's paying out. Yeah, blocks is a brand new position, as you saw last week. So this is just slightly in the red, but I expect this to kind of eventually get into the green. And BTCI still kind of lagging behind with like the downtrend that Bitcoin has had over the last several months, right? But this is slowly kind of climbing out of there when you compare that to like its unrealized gains here at 31%. And yeah, on the unrealized gain side, pretty similar. Only one that's kind of started just going down is MLPI. That's been kind of struggling just because like as peace talks resume, the price of oil goes down, so that's affecting MLPI. So this is to be expected, and maybe I might actually buy some of these little dips it's been having. We'll see later that it's been kind of struggling on the month. And yeah, and then OR again, YMAX and ULTY. And this is kind of like the NAV erosion we talk about, right? You can kind of see this here. But yeah, surprisingly flipping green in total return here. And yeah, and if we add all that up together, so total profit wise, so this includes realized gains, dividends, and yeah, kind of all that on the margin net value, right? I'm up 99.2K or 43.14%, which is amazing in total profit. On the unrealized gain side, and if we add in like the realized gain, so I have some losses here from kind of the rebalances I did earlier this year. If you check out some older videos, I'm up 28.4K or 12.35%. So all in all, like pretty amazing to see. Like I'm just about to break 6 figures in total profit here, which looks pretty cool. If we pop over here to see how that breaks down between the growth and high yield income, that 411.7K, 200K of that is in growth. So a little less than half my portfolio is in growth still, 48.59%. And then on the high yield income side, sitting at 211.6K, so 51.41%. So yeah, the balance has firmly tilted into high yield income now, and this will kind of just keep growing just because I'm pushing a lot more, as I've mentioned, and I just want to just get my paycheck replaced as quick as possible, just in case a layoff ever hits again, right? I don't want to be in the same position I was in a couple of months ago where I had to rely on unemployment, right? If we check in on the margin health, so all the same numbers for gross, the margin used, and net portfolio, right? But if you take the gross value and then multiply that by the blended margin maintenance, all my positions are 25% margin maintenance, which is nice. So this kind of maximizes the most margin buffer I can get on my money. My portfolio would have to drop to 102.9K. So if this net portfolio value dropped to that much, I'd be in a margin call, right? So if you minus out the net portfolio value to the margin maintenance number, that's a margin buffer of 127.2K. So if you take this, divide that by your net portfolio value, you get this number here, which is your margin buffer on the net portfolio value, right? So this is what you see in Robinhood and when you check your buying power, right? So roughly matches that. But like I kind of say in every weekly update, I don't like going off of this just because it makes you feel safer than you are. You're just like, oh, a 50% drop won't happen. But really, what I think this number misses is that like it doesn't give the context that if your gross portfolio value drops by 30.90%, that's the equivalent of a 55.28% drop, right? So it's roughly multiplied by your leverage multiple, right? So yeah, that's a key thing to note, right? Because all these assets are what's moving the portfolio, right, altogether. So yeah, a 30% drop, I think like most people would feel a lot less safer, right? That happened over a month in COVID. That happened over a year during the tech downturn in 2022. So yeah, the goal is to kind of just get higher and higher. And yeah, this is kind of growing every week, every month. So just want to get this in a good place, right? The goal eventually is to get this to ideally 40, 50%, and as high as I can get it, right? Just so that like I really do feel insulated if there is like a crazy 30% flash crash one month, right? And yeah, so as far as the margin buying power, if you take your margin total, minus out your margin used, you get your buying power right now of 84K. If you take roughly half that, that gives you your cash available for withdrawal, which is 42K. So yeah, this is pure cash that I can just take out of the portfolio if I wanted to. Or if I wanted, I could invest 84K straight into the portfolio. Like this would neutralize all my margin buffer or a good chunk of it, right? Like if we did the example here of like, if I added 84K to the portfolio, for example, right? Actually, this would stay the same. Yeah, you can kind of see how the margin buffers compress quite a bit, right? But still, yeah, not too far away from a margin call there. But yeah, you get the idea, right? But yeah, I want to keep this as high as I can, really. And then if we check in on the dividends in the month, so I'm estimating roughly $5,028 every month that I'd be getting in dividends. So as a reminder, I basically average out the last 3 months on the monthly dividends and then the last 4 weeks on the weekly dividends to get this number. So it's a little bit different than what you see in Snowball, right? Because they basically get the last payout and project it out. So sometimes it comes in higher, sometimes it comes in lower when you look at Snowball, but this kind of gives a better average, I think. So yeah, I've crossed 5K again in the monthly dividends. Can kind of see that this has kind of slowly been growing over the last week over week, right? I think now that I'm like invested in a lot more safer yielders, right? That's kind of stabilized the dividend a lot more and stabilized the portfolio. So I think this has been nice that this has been steadily growing. It's not as dependent on like kind of ULTY, YMAX and all that. So yeah, so that 5K amounts to 1.16K in weekly dividends and then $165 daily. So if I divide that by just the high yield incomes assets that are in the portfolio, that's roughly a 28.5 distribution yield, which is great. And that's like a 60.3K extra that I'm making in income every year. So you could add that to my salary. My total comp right now is like 211K. So that pushes me up to 271K a year, which is crazy. And actually, I might actually add that there just to kind of get a counter and just to kind of help sober up like where I'm at, you know, in my total comp with the year, including my dividends. You might see that in a future video, but yeah. And then if we also take that same number and divide that by the full portfolio value, that gives you 15.27%. So that's roughly like the yield on my full portfolio value there. And yeah, and then another thing to note here is that like, because I have all this margin that I've taken out, right? Like there is a cost to that, right? That's not for free. So I'm paying $677 a month in interest. So for 4.5% for carrying this 181.5K in margin. So not so bad considering that like I'm making 5K a month and then I'm paying $677 a month to make that money. So I think that's a good positive spread, right? And yeah, that's the numbers here on the sheet. If we pop over to Snowball, we can kind of check on a deeper dive of the categories here. So I have them split so yeah, I have my ultra yielders here. So YMAX, ULTY, GIAX, Chippy, BTCI, block. So anything that's like 30% and up, I include in here. So those will potentially tend to erode a bit more. Yeah, GIAX potentially will actually hold up nicely from what I've seen from its past performance. Chippy obviously has been carrying this section of the portfolio really heavily, even though it has like a 45% yield just on the strength of the semiconductor industry in the last little while. And then, yeah, we'll be curious to see how blocks performs. I think it should, in theory, outperform BTCI a lot better from what I've seen from my back tests here, right? But yeah, overall, up 16.5K on the ultra yielders, or up 15%. So that includes capital gains, realized P&L, dividends received. Anchors here doing great as well, up 14.95% or 14.6K. So that includes all that, total return, right? And yeah, and that's really just the core workhorses of the portfolio: XPAY, TSPY, TDAQ, SPY, QQQI, MLPI, KCOP, BCAT. Yeah, that's you can kind of see that there. And they're all doing great. XPAY is kind of leading the pack here. And yeah, all the anchors have been doing solid. And this is what I'm really focusing on this year as far as the high yield income. I have enough in the ultra yielders here. I'll throw in a little bit here, mostly into like Chippy, GIAX, and blocks and BTCI at times. But YMAX and ULTY, I'm kind of leaving them be for now. I'm just kind of collecting their dividends and pretty much reinvesting them. And then I have my hedge here category. So that includes ORR, KGLD, and CLSE. So ORR and CLSE are kind of long shorts, so meant to reduce beta and volatility for this section of the portfolio quite a bit. So I'm kind of hoping to kind of keep this like 40K of capital pretty intact overall and to kind of smooth out the volatility of the portfolio. And KGLD, as I mentioned, I'm buying like $200 a month of that, as this is kind of my weird way of doing put insurance in a way. Even though it doesn't quite act like put insurance, it's kind of more like an uncorrelated hedge to the market. So yeah, I'm just going to keep buying this and yeah, just collecting income from it since it's KGLD. And here the growth and dividend growth anchor ETFs, right? So this is all my uncapped growth positions, right? All growth except for SCHD here, which is dividend growth. But yeah, these are all firmly in the green, double digits, right? Yeah, all doing amazing, honestly. Yeah, this is kind of like the backbone of my portfolio that's helping offset some of the NAV erosion that I might be experiencing, right? And yeah, just kind of getting some of that growth still. This is how I kind of first got started investing, really. And yeah, so I'm just kind of holding on to these. Maybe one day I'll sell out of them and kind of go full income. But yeah, I just haven't, I don't have the balls to do that yet. We'll see if I get there. And yeah, a lot of great suggestions in the comments too that people have mentioned of like, with all the capital that I have here, I could like kind of run my own covered calls technically. So I don't know, maybe that's something I could maybe do with this growth portion of the portfolio eventually. Who knows? We'll see. Something to think about, but something I need to skill up on quite a bit before I do. And if we pop over to the growth side of things to kind of really compare on the month how we did. So yeah, we can kind of see here, if we check the full month, right? I'm up 28.2K or 13.98% on my portfolio, and SPY in the same time is up 5.29% or 10.6K. I think how they calculate this and why it maybe differs a little bit from the Robinhood stuff is that they kind of assume that like anytime I invest my portfolio, I invest in SPY as well too. So I think maybe that's where there's some differences there. And yeah, on the month, you can kind of see like a more than double the performance of SPY there on the week. So yeah, this you can see that this is a little bit different too, but up 7.6K or 3.42% or 3.2K or 1.46% for SPY. So yeah, outperformed it quite nicely. And yeah, you can kind of see year to date as well how we're doing against SPY here. And if we check in on my favorite section here, the heat map, so we can kind of see at a glance what happened this month, right? So Chippy just kind of continuing its monster run. Semis have been going crazy in the last month. CHD up modestly here, 1.3%. XPAY outperformed VU, which is always crazy to see. XPAY honestly is always surprising me. I've been really happy with its performance, and then especially if you're able to buy in the lows, like I've gotten really lucky with it so far. PMO just tracking above the tech index, so momentum doing its thing. CLSE pushing above SPY, which is cool to see. ORR still lagging behind a bit, not as much as like previous months, which is good. MLPI got hit hard with the news of the peace talks and that elusive peace plan that's still just never happening, but that's down 4%. BTCI still kind of going down a bit. VGT was up big this month too, probably with like some of the semi stuff that's in there as well. KCOP up a lot with the peace talks. And yeah, here, interesting. It's cool to see that TDAQ, look how close TDAQ is capturing all the gains from its reference index, right? Like that's between its capital gains and dividends received, but like really awesome to see. And then even when you compare it to like I, right? Like 6.6% versus the 11%. Honestly, like the more, I think I mentioned this last week, but like the more I see this, like, yeah, some days I'm just like, do I just roll into TDAQ? I know I've said in the past, they've done the options differently, of course, but I don't know. When I run the Testfolio comparisons, right, it's hard to ignore like how well TDAQ does against QQQI and how well TSPY does against SPY, right? You kind of see it here. Like TSPY just like gets a lot of the close to the total return of VU here. And yeah, and SPY kind of gets like a little less than half of that, or a little more than half rather. So yeah, interesting to just see the correlation and like how things move, right? So yeah, stuff to think about really. And if we check on the week, you can kind of see, yeah, MLPI was weak on this week with the peace talks. HD down a little bit as well. But yeah, Chippy up big again. So yeah, you can kind of see how stuff has moved, right? And GIAX moved a lot this week, 6.3%. So this has the most international exposure along with ORR in the portfolio. And this one, a lot on the talk of the peace talks essentially. So yeah, that's where we're at. We're at year to date. Mostly in the green there, really ORR, BTCI lagging, blocks, this is fresh, but that's like slightly in the red, but most everything else is in the green, just like Chippy with its monster run here, SCHD doing amazing this year as well too, with the rotation from kind of tech to value that happened earlier in the year, and that's still kind of slightly happening at times. PMO kind of just crushing it, really the momentum plays outperforming QQQM, which is cool to see, but not outperforming VGT. VGT is always the king there, always does it a little bit better than, which is cool to see. CLSE here just outperforming VU, which is cool to see. This is kind of the long short on US equity. So I think like because it protects on its downside, it's like, but doesn't have as much upside, it still ends up working well in its favor as it grows, right? And ORR just kind of lagging behind here with all the international exposure and specifically the Japan exposure that's affecting things. Yeah, I might have to take a look at that. I've seen some stuff around Japan as far as like their interest rates that kind of had me a bit worried. So we'll maybe have to reevaluate ORR with like things kind of materially changing, especially on the Japan side, which is a large part of their investments. But yeah, we'll see. Yeah, it could be a thing where maybe I just throw it all into CLSE instead, right? Just this one has been just doing amazing and works well as a hedge to US equities at least. And yeah, you can kind of see that even ULTY kind of almost matching VU in total return, YMAX climbing up there. TDAQ again here just actually has fully matched QQQM, which is pretty amazing to see, honestly. And yeah, how QQQI is lagged behind, right? Same for SPY, but TSPY a little bit capturing a little bit more VU there. So yeah, love these heat maps, and I use these every week to kind of decide my buys and kind of see what's low this week, right? So like kind of seeing this, for example, makes me think that like, maybe next week I should be doing a little bit more of MLPI, right? So love the heat maps, and if I combine this with like the find a dip finders here and on Snowball, this is super handy too to kind of see what's low on the 50 days, on the 100 days, on 200 days, right? Very useful. And yeah, and if we pop over to dividend calendar, we can kind of see that like, yeah, we had a strong May in dividends, right? We had 4.9K in dividends that came in, and yeah, just strong weeklies between Chippy, ULTY, and YMAX, and then just kind of strong presence from the monthlies every week, basically, almost, or more in the middle of the month, rather. So yeah, this week we had GIX that came in, my first dividend from them at $13 or 23%, had Chippy come in at $431 or 42%. ULTY at $205 or 64%, YMAX at $140 or 53%, and my first BCAT dividend at $45 or 19.44%. So yeah, strong month of May. Yeah, as you saw here, this is see how different our estimates are. So that's why I kind of just don't even go into them. I kind of prefer mine as far as the averages. Kind of makes it a bit more realistic. Next month, it's looking like it's going to be a big one in June, 5.7K, which is awesome to see. So yeah, it's going to be a big month and actually going to be outperforming what I had in the previous month, right? We can kind of see like month over month how stuff has gone, right? So beat last year's May, which is cool to see. Looks like I'll be beating last year's June as well too. So really see that, like, even despite some of the NAV erosion, the yield erosion I've had, and just because of the sheer income that I'm putting in the portfolio, right, and building my own income from the portfolio, building up my dividends year over year, which is cool to see. You can kind of really see it here, right, with the dividend growth. And yeah, just about matched April's dividends here, so 4.9K. But you can kind of see that ever since I rebalanced, things have just been kind of steadily growing, which is cool to see, right? Makes it a little bit more even as I've been kind of really refocusing on the cores here, right? Like, here you can kind of really see the yield on cost. So ULTY, for example, I'm getting 64% a week, but really for all the capital that I have invested into it, the yield on cost is more like 41%, which is still amazing in that sense. But yeah, just because its price has gone down so much, right? That's what the yield has come down to. YMAX, I'm getting 53% every week, but really it's like 35% for all the capital I have invested. BTCI, it's 28% every month, but getting 19% with how the capital has eroded, right? Chippy doing amazing, blocks holding up strong, but pretty fresh. But you can kind of really see here the core, right? Like, and this is why I'm really investing in this middle section here this year. Because yeah, these just hold their yield and their NAV a lot better. Kind of really see, right? So this kind of just makes a more solid foundation for the income and kind of keeps it a lot more predictable and kind of steadily growing it, right? And makes it a little bit less erratic than when I was putting very heavy into ULTY and YMAX last year, for example, right? So you can kind of really see where the annual incomes are coming from between all these, right? Chippy kind of really heading the pack here. And yeah, that's the dividends this week. As far as how we did with our top line numbers. So yeah, you kind of saw us a little bit in the other video, but we can kind of go over it and specifically kind of dialing in on the month over month here. So yeah, big jump in gross balance here, just strong performance on the month, and then also all the income that came in. So yeah, went to 411.7K from 374.7, went from 202.3 to 230.1. Equity jumped from 53.99 to 55.90. Cash available for withdrawal here. So this dropped. And so this is majorly due to because I ran that dividend reinvestment experiment, right? So like I mentioned in another video, I was basically taking all my weekly dividends, so Chippy, ULTY, YMAX, and reinvesting the dividends every week as an experiment just to kind of see the effects on the portfolio. Like, I've run projections on it, but I just kind of want to really see it in practice, right? So all the monthlies, I just let those deposit to cash as usual. So really, like, if you kind of map that out, right? Like, so say, for example, I take Chippy here plus 207.96 for ULTY plus 128.62 for YMAX and times 4. So that's 2.9K of dividends reinvested out of the 4.9K, right? So a good chunk of the portfolio, right? Over 50%. But yeah, so what happens there is that like less cash gets deposited, right? So less becomes cash available for withdrawal to offset the margin balance that you're accruing. So this resulted in a drop, and really, like, you kind of see how like this has been steadily growing, which I like, and I want to keep that going. So next month I'm gonna keep the experiment going, but I'm not going to be doing 100% of the dividend, right? I'm thinking that every week I'll basically take half of whatever weekly dividends I receive and then reinvest that in the portfolio. So I'm hoping that like that will kind of just keep the cash available for withdrawal growing every month, and yeah, just gonna keep that ball rolling, because I don't want to be regressing on this and then this eventually kind of reaching close to zero, right? Yeah, so as a result too, because of that, the margin buying power was slightly lower compared to last month. Ideally, same thing here. I just kind of want to keep this growing, right, as it has been. And yeah, margin buffer grew on the net value, on the full value rather. So up to 30%, which is great. This is the first time I've hit 30% in the last year. And then net buffer, yeah, this is the highest it's been as well too, 55%. And yeah, margin buffer as well, up 127.2K. Margin, yeah, just keeps growing, right? Like if we check all that in the charts, you can really see the gross value, just a big jump up here from run up we've had for the last several weeks. Same for the net value. Margin just kind of steadily climbing, right? Because this is roughly gets roughly the same amount gets put in the portfolio every month, roughly, just because like only the difference of what my monthly expenses are, my monthly dividends are, gets added to margin, right? With how that works. And yeah, kind of see my margin equity steadily growing here, margin buffer, all that good stuff. And then here, margin buffer just kind of taking a big jump here with the strong market performance, right? And then kind of see my dividends as well since I started in May last year. And again, kind of seeing how that's kind of steadily growing in the last few months, which is great ever since I rebalanced. And yeah, that's numbers there. As far as the goals, so I wanted to get those updated. So as a reminder, yeah, these are some of the goals here as far as like my next extra net paycheck covered monthly, my monthly expenses, my net monthly salary here, 9.75K, my gross monthly paycheck covered, 14.5K, and my gross monthly salary, 29,166. This is like the target that I'd want to hit before I retire. We'll see how close I can get to that. Yeah, even if it falls somewhere in the middle, probably would be okay too. But yeah, just to kind of account for any market swings and things go down, right? If like I'm at this point and then things go down 50%, then I'm still covered, right? So yeah, we'll get these updated. So monthly expenses covered. So this is closer to, or sorry, extra net paycheck covered. So this is actually, yeah, this stays pretty much there, right? Or actually, this maybe moves up a month. Can move that here. Monthly expenses cover. That's pretty much like the 9.1K that we saw. So that this is looking like July 1st, 2029. And the extra net paycheck cover would be potentially by September this year. We'll see. Net monthly salary covered. So we're looking for 9.7K. That's looking like, oh, that maybe moves up a month here. And yeah, gross monthly paycheck covered. So that's 9.7K here, or gross monthly paycheck, 14.5K. So yeah, roughly this moves up here. So July 7th, 2033. So overshooting a little bit the 40-year-old target here. And this is a big reason too that I'm kind of reinvesting my dividends too, just to see if that's going to help check these. And then I actually need to update my projections based on that, on whatever formula I land. Yeah, just because here I'm basically just adding the blended yield, right, to the average monthly dividends every month, essentially. So 90% of that, essentially, because of how I'm splitting stuff right now. Assuming a low kind of annual growth rate of the portfolio of 4%, dividing that over the 12 months, right? And then my monthly paycheck contribution and the average monthly dividend I'm adding through my investment, right? So sitting at $111 every month right now with that 15% blended yield. So yeah, you can kind of really see that like potentially at 40 years old, might be at $1 million in the portfolio in the gross balance, potentially 687K in net equity, 315K in margin, so 68% equity here. Yeah, still debating that like maybe once I reach, maybe 70% equity or whatnot, that's when I kind of start reinvesting a lot more of the dividends potentially and just kind of try to stay at that level pretty much. So we'll see. If we go to 45 years old, potentially 1.87 million, 1.6 million on the net equity, 90% equity here too. So yeah, we'll see. At this point, I'm probably thinking pretty heavily that like once I reach 70 or 80%, I'm just going to keep a level of margin on all the time just to kind of have that light leverage, like 20, 30%, right? But yeah, we'll gradually grow into that if this keeps going on, which is nice. And yeah, that's where the projections are sitting. As far as updates related to the portfolio, yeah, like I mentioned, Blocks was added to the portfolio last week, as you saw in the video. So definitely check that for my full investing paycheck. Yeah, and the reinvestment experiment that I mentioned, right? Yeah, as I mentioned, I'll just be doing 50% now, pretty much of my weekly dividends, and we'll see where that lands us when we do our month-over-month dissection of stuff, right? I just want to see this cash available for withdrawal amount growing, as I've mentioned. Yeah, and then if we pop over to the bills this month, but like, yeah, as far as cash flow, ended up making 15.4K in income across my paycheck, the dividends, rent income, my 401k contribution, business income, all that good stuff. So strong month. My expenses came in like hotter than expected this month, quite a bit. So like a little over 2K over the 9,000 threshold I typically try to hold. But despite that, because of the strong income, still overall kind of have like quote unquote savings, 4.4K. So a 28.6% savings rate. And the big thing that came up this month, actually this happened today, but like we went to go pick up my fiance's wedding band for our wedding coming up. And yeah, so that was a big 1.6K drop there. This is going to be nice to reinvest for the cash back in RH Gold. I had some house stuff that came up where I had to just do an overdue roof cleaning. There was some moss growing on the roof. That's pretty typical for the Pacific Northwest, right? So that was a little bit of a doozy there, like upwards of $800, plus some plant stuff in the front of the house that I had to do. And then really the Hawaii trip, like that I mentioned, right? So like if we go to group, you can kind of see that my travel here, this is all Hawaii, just everything that we spent when we were there. So 1.8K. You can see my fixed costs here, 3.7K. Guilt-free spending was 3.4K. House renos here. Bills that came in this month, $728. If we go back there, so that was internet, gas and electric. So this is monthly, internet's monthly. We had the water bill come in. This is every 2 months. And then trash, right? So garbage over here. So yeah, those were kind of like the big ticket items, really. When we look at all that, right, as far as the outliers for this month. And yeah, and then as far as finance video of the week, yeah, I'm gonna cheat it this week. I'm gonna nominate my own video, so definitely check it out if you haven't. I dropped this yesterday. Like I mentioned, this week I was doing a big kind of celebration week to celebrate that it's been 1 year living off my portfolio, investing 100% of my income to create cash flow and paying bills with margin. So yeah, lots that I went over in this video. If you check my other video as well earlier in the week, kind of celebrated really surviving the layoff because I finally got paid my unemployment too. So definitely check out that video if you haven't had a chance yet. So yeah, it was a big week on videos, dropped a lot. Probably too much, honestly. Like I think I need to space them out a bit better next time, even on special weeks like this. Like realistically, this video could have come out like next Wednesday and it probably would have been fine, right? But yeah. You live and learn from my mistakes. This was a lot of videos to get through in a weekend. But yeah, that was crazy celebration week. I hope you enjoyed looking at everything, following along with everything with me and kind of celebrating the big milestone this week of 1 year. Here's to the second year. I'm looking forward to growing the portfolio even more and excited to see where it goes so we're starting from this 411K gross value, and then we'll see where we end up for year 2, right? And again, if you want to support the channel, the best way of doing that is checking the description below. You'll see my free Snowball portfolio, free Discord server currently. Again, I'm debating whether cutting this off and kind of gating it behind the Patreon and YouTube membership, my free Blossom social profile, and a paid portfolio spreadsheet tracker. So yeah, all different ways you can kind of support the channel if you want to go beyond just watching the videos, which honestly helps a ton in itself. So yeah, we'll catch you in the next video. Look forward to the full paycheck investing video on Friday, and I'll catch you in the next one. Peace.